Well, welcome everyone to our conversation with the Group Chairman of Standard Chartered Bank, Dr. José Viñals. Now, Dr. Viñals was appointed chairman of the group back in 2016, and prior to that, he was financial counselor and director of the Monetary and Capital Markets Department at the IMF. Now, our conversation with Dr. Viñals is going to cover a broad range of topics, including the Chinese economy, Standard Chartered's future plans here in China, as well as green finance, globalization, and much more. Dr. Viñals, welcome to the program. Let's talk about your China trip first.
Right.
For this trip, you've met, of course, policymakers, you've met clients, and of course, the Standard Chartered team. What were some of your main takeaways from this trip?
Main takeaways are first that the government authorities with whom I have spoken, they have all shown their strong support to the private sector and to the foreign investors in China. We, as a leading international bank present in China for more than 165 years, know about Chinese hospitality. We know about all the great opportunities associated to China, and therefore it's very good that we got these very positive words from our authorities here in China. Second, from the clients that I met, mostly corporate clients, I saw very important business objectives, great technologies, great business, vitality coming back strongly, still not where China can and should be, but again a very significant sort of recovery in the business world. And I see world-class companies here in China. We are very fortunate to have great clients, great corporates, which are doing fantastic things both inside of China and for the world, many of them in the new economy and the new industries. And that is something which, again, has a lot of positive connotations.
Yeah.
And then our employees, our staff, they are very passionate, very hardworking, liaising with our clients in order to find together with them what are the best opportunities to help them to create together important and valuable things. And again, I can see a lot of positiveness in there, a lot of passion, enthusiasm, and very good mindset. So from all three sides, very positive messages.
Dr. Viñals, so you mentioned China's economic recovery. Let's talk about that. The global economy right now, of course, facing a lot of headwinds. So what are your expectations for China's recovery for the remainder of the year? And if we zoom out a little bit more and take a look at the long term, are those long-term structural drivers of growth for China, are those still robust, do you think?
Thinking of the short term first and then the long term. On the short term, it's true that the first quarter was about 4.5% growth. My impression is that the second quarter is going to be better. And my expectation is that the target of the authorities, the 5% growth rate for the current year, will be met or even surpassed. Our in-house view is that China will conclude the year with a growth rate which is around 5.4%, which I think is good. Now, if you look at where the rest of the world is, particularly the West, this growth rate is significantly better than what is expected in the United States and in Europe, where growth rates would be close to 0%, maybe with a plus, maybe with a minus sign, but would not go beyond that. So I think that this is good overall for China. But again, the recovery is not yet finished. There are some uncertainties in the short term. The real estate sector continues to present some challenges that are being addressed, but this will take time to digest. But overall, I think that beyond these issues, China will have a healthy 2023 in terms of growth. Now, if we look at the medium term, I think that there are two factors which are critical for determining China's growth. One is population demographics, and the other one is productivity. Demographics, we know, are going to be less favorable to China in the future than in the past as a result of the changing evolution of the demographic pyramid, and much older people, and then population is going to shrink. So that is not going to be a source of growth for China, but the opposite. But what is going to make a difference is productivity, making people more productive. And that means two things. One is education, continuing to provide the labor force in China with the education, with the skills which are necessary to adapt to the new economy, to the new technologies, so that people can be very productive in this sense. Continue to invest in the sectors of the future, and technology is going to be key. So if those things can happen, productivity growth is going to improve, and that is going to mean that China will be able to counter the negative demographics and continue to have very good growth rates in the future.
So Standard Chartered has set a strategic objective of what you call seizing the opportunity here in China by trying to double both onshore and offshore profits. And I was wondering if you could give us a time frame for that, and perhaps some of the strategies and expansion plans the bank has in place or will put in place to achieve that goal.
Thank you. The time frame for doubling our profit coming from the China-related onshore and offshore business is the 22-24 period. So by 2024, we expect to double that profit. And I can tell you that we are on track to achieve that objective. And we are supporting that by an investment plan. In addition to all the investment that we are making in China, we have added $300 million of investment for this period, which is buffering up, improving our capabilities, both in terms of branches, our network, our corporate business, our wealth management. All of that is going to be very helpful for us. If you look, for example, at the growth of our onshore income and of offshore income in 2022, it was like 10% and 20% respectively. So again, that's something which is going very well. And we continue to do important things which I believe will be conducive to this objective. For instance, we have established a center, a GBA center in Guangzhou. This is something which is going to help us better connect with our clients, both corporate clients and our individual clients, to help them. We see tremendous opportunities in terms of wealth management in addition to helping corporates. We have gotten approval for a securities company here in Beijing, and we are aiming to start operations as soon as we pass all the preliminary regulatory inspections. We are very active in Chinese capital markets. We are the first bank which has traded a futures government bond. So these are some indications of the things we're doing. We are very decidedly supporting the internationalization of the renminbi. We are the bank which is best positioned to support that. We already have renminbi clearing and investment capabilities in 40 overseas markets. In 27 of these markets, we have gotten Best Renminbi Bank awards. So again, all of this tells you that we are very poised to continue investing and growing our onshore and offshore Chinese-related business, and that we will now achieve this objective of doubling our profit and then move well beyond that in the future with further investment.
And what about green finance, Dr. Viñals? Because you're concerned that we're not seeing enough flows into sustainable finance to meet our world's decarbonization goals. And China, of course, has set a very ambitious goal of net zero by 2060, which means China needs to achieve that at a faster pace compared to many advanced economies. So how do you see the development of China's green finance industry and perhaps the opportunities that presents Standard Chartered?
Yeah, the world needs a lot more of green finance. Yeah. China has established the objective of achieving net zero by 2060 and having peak emissions by 2030. And for that, China is going to need between, $25 trillion per year, trillion renminbi per year. Mm-hmm. So this is something which is important, and then you will need to finance that. And I think that the private sector can play a role there. We have made a commitment to facilitate more than $300 billion of sustainable finance between now and the end of 2030. And we have also developed a number of sustainable products, financial products, that we put at the disposal of our clients and customers, both in the corporate space and in the retail space. For example, a sustainable certificate of deposits for our retail clients, and we also have many products that help our corporates sort of go into green and sustainable sources of financing. We have also been working actively with companies, for example, Trina Solar, to finance a green syndication loan for $250 million. Again, those would be concrete examples of things that we're doing. But we have a full menu of sustainable finance products that we're backing with this $300 billion commitment in order to help advance the cause of sustainability. And we are discussing intensely with our Chinese clients, the corporates, how can we best support them in the transition, both in terms of financing and in terms of any technical support that we can provide through our specialized teams. So I am very confident that we can continue to make progress and contribute to China's advancing in the achievement of the net zero objectives.
And what about the dynamism of the region, Dr. Viñals? Because Standard Chartered derives about 2/3 of your income from Asia, and you've identified China ASEAN, China South Asia, for example, as high growth corridors. So what do you think about the economic dynamism of Asia overall, and perhaps China's role in supporting growth and development in this part of the world?
I think the dynamism of Asia is undisputable. You were talking about the South Asia and the ASEAN region. The income that we derive from those corridors, for example, in 2022 grew for the China-South Asia corridor by more than 20%, and in the China-ASEAN corridor by more than 60%. So we're talking about a lot of dynamism there. Asia now has several engines of growth. One, the most important one, remains China, with the growth rates that we were talking about earlier in the conversation. Over the medium term, this is something that will continue to be very important for Asia and for the world. But now you have two other engines added to that. One is South Asia, which one very large economy, which is India. That part of the world is showing a lot of dynamism, and also the ASEAN economies. And that group of economies, in terms of GDP, is quite significant. If they were a country, they would be one of the top 5 economies in the world. And again, you have that additional source of engine for Asia. So I see a lot of synergies between those different centers, and certainly we're seeing that reflected in the corridors that I was mentioning. Yeah. But beyond that, I think that the regional trade agreements which exist in Asia are providing for further connectivity. And Standard Chartered is a connector bank. We are a bridge bank. And therefore, this plays to our strengths. We are helping our clients with their reorganizations of their supply chains, both international clients and Chinese clients. We are providing the connectivity in terms of trade and investment flows, which is supporting all of these dynamic developments, and this is something which is very good to our business as well. So I think that's an example of a win-win.
Yeah, absolutely. And you mentioned Standard Chartered as a connector bank, and I think it's the mission of the bank, right, to connect for example, Asia, with Africa, with the Middle East, and then to connect these regions as well with the Americas and Europe also. So clearly I feel Standard Chartered thrives when globalization thrives. But you've also perhaps sounded alarm that we might be seeing some pressures on globalization, and if we abandon that, that risks everyone's living standards. So how alarmed are you about the headwinds towards globalization, and is there anything more the international community can do to make sure perhaps we don't lose the progress that we saw in the past few decades?
Yeah, I think that globalization is something that we need to enhance rather than discard. So yes, I think that there have been problems in globalization. We have had a globalization process which has not been sufficiently inclusive, and we need to make sure that globalization works for all and not only for a few. So I think that's point number one. And Standard Chartered is very much committed to resetting or helping reset globalization so that it becomes a lot more inclusive. So for example, we work a lot with small and medium-sized enterprises in order to further plug them into the process of globalization and in providing better supply chain financing solutions so that not only the large companies can thrive with globalization, but that everybody in their supply chain, including the smaller companies which are helping them, also benefit from globalization. So I think that this is extremely important. Globalization is changing nature, and therefore globalization will become a little bit more fragmented going forward. This is why it is very fundamental that you have connector banks linking the different sort of areas of globalization in a more fragmented manner to precisely to repair that fragmentation, and that's why the role of a connector bank like Standard Chartered is particularly important. But we also have to look at some of the positives. Some of the positives are that fortunately some of the changes in supply chain to make them more resilient are not coming from onshoring, reshoring, friendshoring, but are coming from the regional diversification of global supply chains. And we're seeing a lot of that in Asia. So that's one positive. Second positive is that if we look at the total volume of trade compared to pre-pandemic, we are now higher than what we were before pandemic. And the third is that if you look forward, we have made a study called The Future of Trade that shows that between now, over the next couple of decades, there is going to be $30 trillion added to global trade, and emerging markets are going to be leading the charge. So we're going to see a process of global trade developments where there is going to be more dynamism coming from emerging market to emerging market trade rather than advanced economies to emerging market trade. So there is a shape also in the regional composition of trade dynamism going forward. But again, globalization is something that we need to preserve, is a global public good, but we need to improve it. And continuing to embrace multilateralism, I think, is critical for that.
Improve it, perhaps reimagine it as well. A fantastic conversation, an insightful conversation. Dr. Viñals, thank you so much for your time.
Thank you very much. Pleasure.